Welcome, everyone, and thank you for joining. My name is Ying Sa, the managing partner of Community CPA. I have worked with business owners during their good times and the hard times. I understand what means when business is going through a difficult period. In this webinar is a practical session. The goal is not to create fear, but the goal is to help business owner to act early, stay organized, and make a better decision to protect what you have built, right? Many business owners are dealing with cash flow pressures, debt, lawsuit, tax issues, declining sales, or personal issues. When a business is in trouble, owners often make a rush decision. That is exactly when a careful planning matters the most. So asset protection is a strategic process of organizing your personal and business asset in a way that shield you from potential risk such as lawsuit, creditor claims, IRS or state tax enforcement, regulatory actions, audit, unexpected life event like illness, deportation, or death. Asset protection is not about hiding asset, right? It is about avoiding such a risk that will wipe you out. It is about legally structuring ownership, control, documentations, and compliance so the wealth is preserved, remains accessible, and can withstand scrutiny during the period of uncertainty and crisis. There are several warning signs your business is in trouble. So those signs, sometimes you feel them all come at once. Sometimes they are just one pop out here and there. You're hoping they're going to go away. But all of these signs are important to recognize because that is an indicator for you time to protect your asset. So the early sign of the business is in trouble start with cash flow problems, struggling to make payroll. That is so typical, right? Paying vendor late, and constantly moving money from one account to another, cover head, then tails, and that is a sign of cash flow issue. Debt pressure, that is normally coming from the people you borrow the money from. So loan issues, missed payment, all of that is part of the sign the business is struggling. Of course, tax problem is another one. Fell behind on the payroll taxes or use tax money to fund operation and owe IRS. Legal and vendor pressures, of course, demanding letters coming from your vendors saying that you haven't paid them, a threatening lawsuit. So all of that is a sign of you are struggling. Declining business performance in a unstable time like right now, it started from tariff tax, then you got, inflation, Strait of Hormuz. So all of these unstable factors actually making the business environment difficult for you to manage. Small business owners might experience business performance going down, falling sale, lower margin. That is all normal. So owner behavior changes, that could be a sign of a struggle as well. Maybe delaying difficult conversations, those partners that don't want to talk anymore. Trouble does not always mean failure, I want to say to our business owners, but those denial is expensive. You want to have that conversation. The earlier you respond, the more choices you may keep. So the earlier you talk among the partners, the more solution you're going to have. Once you see the warning sign, the next step is to understand what is actually at risk. And that starts with the legal basics. Now, what are the legal and the financial basics of asset protection? Business structure in a very simple terms, that is the sole proprietorship, partnership, and LLC corporation, these structures. If records are poor, fundings are mixed here and there, the formality was always ignored, never had a board member meetings and never really had anything documented. Those are the protections we are seeking right now. We are talking about protecting your asset. This behavior weakens your protection. Many owners think that business entity fully protects them. But if you personally guarantee a loan and lease, or you personally guarantee the vendor obligations, those are exposures to you personally. That exposure exists. Going further related to legal and financial basic on the asset protection, the importance of titling and ownership. Who owns the real estate, the intellectual property, and who owns the cash account. So those are all the basics you must know so clearly before you step into protecting it. If you don't even know who really owns it, you don't know how to protect it. If someone moves asset after creditors are closing in, then that could create a very serious legal problem. So that means, say you didn't pay your mortgage for 6 months. So you know that the bank is already knocking your doors, threatening to foreclose your house, and that would already be really late in terms of protecting. Because at this time, if you say, oh, I was just going to sell my house a low price to a relative so that get out of the bank's hand, and then that is already kind of in the radar, so it is too close to the time that you issue being exposed. Timing matters, intent matters, documentation matters. Basic asset protection items, you must understand what they are. Of course, we'll give you tools and strategies. So let's talk about the common asset protection tools and strategies. Asset protection works best when done before the crisis becoming a legal emergency, right? What can business owner do legally, practically when they see trouble ahead? There's some common tools and I can offer to you. Number one, clean separation between business and personal finance. It is the simplest one, but it carries a lot of habit. If you are the kind of person separating business from personal, then you always have done that. It's almost out of your habit, but that is the best protection between your business to separate your business from your personal owning. The asset protection is just like if your business is in trouble and your personal asset, it is protected because it's only your business in trouble. But imagine if you commingle business and a personal in a big way. You spend business money for personal and you don't know when you put personal money into the business. That is already not offering you very good tool to fight with court to figure out, okay, this asset is mine and not belonging to the business, right? It is important because it helps preserve the credibility. They know that you're running both business, personal properly, support the separation. Separation is important. Once it's separated, then one in trouble doesn't mean the other one in trouble. So that's why the separation is very important. It comes with a habit. So this is the first one. It is very easy to do if you have a good habit, but it's very hard to do if you always commingle. So I want you to, after this webinar, you start separating them. Maintain separate bank account. Do not pay personal expense out of business account. Put reimbursement and owner draw through clear process. Write on your check saying that's owner draw. Keep accurate bookkeeping currently. Document major decision. If business owners hire community CPA to do their accounting, that would have already been done. We will absolutely separating your personal from your business. Sometimes you may be spending business money for your personal items. We can spot that. So we make a list, ask you, are these your personal spending? You say yes. Then we move that into your distribution. So if you have a professional service on the accounting side, this should be taken care of already. So the next tool we have for you is to review entity structure and ownership of asset. Make sure the key asset are owned in a right entity. In some cases, operating risk and the valuable assets should not stay in the same place. It's almost like if you own a apartment building, you want a title holding company to hold the apartment ownership, but you want a operating entity to deal with your tenant. So that is very important. It's a very common tools people use, but just in case you haven't even done that, you should do it right away. So my example here says that a operating company may run business, then the separate entity would hold real estate or hold the equipment title. Intellectual property is also something that you created. You want to set that aside, not to let intellectual property be affected by the business running. The business running can fail. Intellectual property is always yours and you can protect it. It must be done carefully early, and in the transfers made, has to be early enough that not to be challenged when you are in real problem. Documentation, of course, is very important in this process. Another tool I have here is insurance as a first layer of protection. How many times something happened, insurance is the first one stepping in to help all the time. Building got burned down, insurance comes in. So making sure that as a business owner, you focus on your legal entity, but you should not ignore insurance. Make sure that your insurance covers everything. If you run a CPA firm, and you should have your equipment being insured, you should have your E&O insurance, error and omission, the practice insurance, right? If you own the property, you should have your property insured. You should have the property content insured. All of these insurance, ladies and gentlemen, is really important. General liability insurance, professional liabilities and error and omissions, director officer coverage, if applicable. See, that's insurance. Cyber attack coverage, umbrella coverage, key person insurance. If your most important person die, you don't want to end up not having a business. You should have a key person insurance, right? So understand the policy limit, exclusion, and understand who is the beneficiary of the policy. The insurance is often the simplest, the most cost-effective layer of protection. Let's not even do anything. Just make sure you have your insurance done properly. The protecting personal asset through proper planning, that is also a well-known tool. Business owners should understand that personal asset may be exposed to business risk. Why is maybe? Because you did a personal guarantee, because you jointly own your property with your business, because your home equity you exposed to different state law, and that home equity, even though you borrowed it to fund your business, but if business fails and your home also goes. Retirement account, you used your retirement account, you draw your retirement account to pay for business conduct, and your business fails, your retirement account also goes if the retirement account is under the business. So how do you go through proper planning to make sure that these accounts are safe? They're not going to go down the tube like the business that is in trouble. Coordinating with the legal counsel, your corporate attorney, on what protections may exist under your particular state law. The exempt and protected asset by each state definition varies by state. So you want to understand that how to plan your personal asset. Make sure that doesn't go with your business up and down. The other tools we have presented here is what we call the contract and a creditor negotiation strategy. Asset protection is not only about like moving your asset out so you're safe. It is also about reducing claims before they become judgment. So the possible steps involves renegotiating payment terms with your vendor. If the vendor is so upset wanting to sue you, say, hold on to your horses. Let's renegotiate the payment terms. Give me lower amount. I'll pay you for 3 years term. Work out modification of loan terms with lenders. Tell your lenders, I will do well. I know I'm going to come up. Do that. President Trump at one time was underwater for $1 billion. So he went to the banker at 3 a.m. in the morning and to pitch his plan for reviving his business. So he was successful. So he got funded. The loan stayed. So people do that. So this is one of the protection tools you can use. Resolve disputes early when it's possible. Review leases, major contract, and for the provisions in there. So what happened to your leases? Talk to your landlord. Maybe the landlord can be so nice that he will not account for the 3 years lease you have left. Preserving asset means restructuring obligations rather than reacting after default. Don't let it default. Be proactive. Negotiate with creditors. The business plan exit options is also a tool. When your business is in this downturn, you can evaluate your business and find out how to sell it, exit. In the very serious case, owner may need to evaluate whether you go on or not, sale business or getting a business line of credit or do a sector of winding down. Maybe the business has three rather independent lines of business. Maybe giving up that one is not making money and selling that out. Okay. So turnaround actions, figure out how to revitalize the business. I literally had one time a restaurant owner come to me because the restaurant is not doing very good. They spend a lot of money on their payroll. So I went to visit the restaurant and I realized that the layout of the restaurant is wasting about two full-time employees in there. So if we could move the kitchen closer to the counter, which they have a huge distance inside of the kitchen. So if they could move the kitchen up closer, they would save that two full-time employee. So we did a budget. We borrowed 35,000 to redo the kitchen. Then we saved two employees, for the whole year. The whole salary is about $45,000 for the two restaurant employees. So that means in 1 year, it will return that money. And then going forward, they will always save $45,000. So these are kind of restructuring and a consultation you can do for your business if you are ending up in that kind of situation. Getting advice early do not mean the owner is failed, right? You're getting advice saying that I'm not sure what I'm going to do. I may even need to file bankruptcy. Like to know my options. That's nothing wrong. That doesn't mean you failed, only means you are proactive. So now let's look at the 7 big common mistakes you need to avoid in the process of getting into a good habit, being proactive, and protect your asset. Number one mistake is waiting too long. Owners delay actions because they hope things will improve. And late actions usually means fewer options and more legal risk. Don't do that. Number two, mixing personal business funds. I talked about that, right? This weakens your case. You're not separating your business from yourself. So that creates confusion in crisis. Number three, moving asset in panic. Last minute transfer may be reversed or challenged. They can also damage credibilities with creditors and the court. Don't do the last minute transfer. Ignoring payroll taxes and the trust fund taxes, like sales tax, that's really not a good idea. These kind of taxes actually become personal liability really quickly. So even though payroll taxes is business side of things, sales tax is also business side of things, but they become your personal liability because they are trust fund. So be sure not to use payroll tax funds for operation. Number five, signing document without reviewing. Of course, that is going to be a huge mistake. when you are doing negotiating with your creditors, and when you are doing a agreement loan modification, make sure you read it. That's a huge mistake. We want to bring that to your attention. You want to read it. And some clients will tell me that, oh, I don't need to read it anymore because AI will just tell me the answer. You can trust AI, but I would advise you not to. AI is only as smart as what behind them, those database they have. You don't even know what's in the database. The fosters can put all kind of information in the database as well, so you would get a wrong answer. So make sure that you review documents, signing document with a sure certainty of what you are doing. And the failing to communicate with advisors early, that is another big mistake. CPAs, attorneys, insurance professionals, and the turnaround advisor, they call themselves they have this magic. They can turn around everything in the industry, in the business world. They call themselves turnaround advisors. Those are advisors you should contact them early, not when everything already fell apart. Assuming one online strategy fits every situation. Asset protection is highly fact specific. Do not go online, find one solution thinking that is for everything. The state law is different, the creditor is different, the timing is different, the ownership structure is all different. So the kind of protecting asset protection kind of actions you have really is customized to where you are, how you are, and what kind of challenge you are facing. Action steps for asset protection. Get current financial information. That is your action number one. Identify what is at risk. So list major business asset, personal asset, liens, guarantees, and pending claims that you have. Figure it out. Where is the risk? And also separate your bank account and tighten your documentation. Review your entity structure, your ownership title, review insurance coverage. That should not be too hard, right? You just call up your insurance agents, meet with your advisor. No need to rush to make a living trust, open all kind of LLCs, and you need to just get what you have right now tighten up, then go further. You will do living trust. That gonna help. You will do other entities that will help, but that is not your priority. Your priority is getting your current financial statement in place. So with that said, we want to give you a summary of the main takeaway from me and the recall here. Asset protection is most effective when it is proactive, legal, documented, and coordinated with the right advisors. Business owners in trouble still have options, especially if you act early. Financial stress does not mean you are not smart enough. You don't have any path going forward. Financial stress does not mean you have no path forward, but it does mean you need clarity and the professional support. So I want to invite you to take one immediate step within the next 48 hours. Gather financial records, list guarantees and obligations that you have, schedule a meeting with me online, and review insurance and ownership structure. Those are important steps to take. This is our website, communitycpa.com. Come over here, that blue button right on the top is where you can go on 24/7 to become our client. You can just go create your account, upload whatever you need us to see, and we'll reach out back to you. And then you have our YouTube channel. We deposit all of our seminar webinars in here so you can find them later when you need it. And these are the 2 books I wrote. We develop our knowledge and provide that in a easy to read style. The book has a lot of stories. All the client stories is a very good resources for you to relate. If you don't know who was successful before you in your business line, go find that in my book. And I tell you how you can become successful business person. And this is the no responsibility disclaimer, knowing that this is just webinar to provide you knowledge for anything you want to do. To be responsible for what you can do, go to the right advisor, come to Community CPA. We are open for new clients. We welcome new clients. These are partners. You can make appointment with us online, and we will see you provide you solutions. I'll talk to you again. Bye-bye.